Okay, good evening again. We are starting session 4. If you can remember, the week before, we started discussing on the financial crisis. So we can say this session is a sort of continuation of the previous session. Today we are going to talk about what causes a banking crisis, central bank past experiences in Argentina crisis and Korean crisis, and also the central bank actions on the global financial crisis during 2008. And later, we are going to have a discussion on central bank actions during corona crisis to prevent a financial crisis. So, if you can remember, last week we introduced what is a financial crisis, what factors can cause a financial crisis, and the characteristics and the types of the financial crisis. Today, we are going to discuss some historical experiences. Actually, in a phase of a crisis, what the central bank had done in history. So for an example, here we are going to talk about the cases, two cases basically, Argentina and Korea. Then, before coming to that, if you can clearly recall what we discussed during the previous session, under the types of the financial crisis, we mentioned there are basically 4 types of crisis: banking crisis, balance of payment crisis or currency crisis, financial market crisis, and debt crisis. Among that, we say this banking crisis is so much usual, or it is frequently happening, this banking crisis. So what is a banking crisis? If we say in a shorter period of time, if larger number of financial institutions or banks collapses, we say that's a banking crisis. So basically, there can be many reasons which can cause a banking crisis. But mainly, we can categorize all these reasons under these 3 key main reasons. Those are loss of confidence, liquidity crunch, and excessive volatilities. So these 3 reasons are the main reasons which cause a banking crisis. If you can remember, we discussed the stages of the banking crisis, starting from the bank run, how it might ended up with the collapse of a financial institution or the bank, right? So all these main 3 reasons can be traced into 6 other causes. Now we are going to discuss banking crisis in detail. The first reason is domestic and external macroeconomic volatilities. Simply, macroeconomic volatilities. So what is this macroeconomic volatility? It can be a domestic and also external. How come a volatility happen in a domestically? Maybe in inflation or regarding the growth, economic growth. If there are wide fluctuations or variations in the prices or inflation rate, or maybe some severe volatilities in the growth rate, then it's a domestic macroeconomic volatility. If we discuss on the external volatilities, it can be a terms of trade volatility or some fluctuations in the real exchange rate, maybe the foreign interest rate. These factors are not domestically changing factors, but based on the external shocks, these factors are fluctuating. So if that happens, we say it's an external volatility. So altogether, these volatilities in terms of trade, real exchange rate, foreign interest rate, it will create an impact on the flow of capital. Ultimately, all these domestic and external volatilities will create a macroeconomic volatility. So normally it says this macroeconomic volatility is the major culprit in banking crisis. So how do we manage these macroeconomic volatilities? There can be several strategies, maybe through diversification. How do we diversify? If we use a portfolio of investment and if we allow a diversified financial system, not only the local banks, but allowing the foreign-owned banks also to operate within the country, that is diversification. In a case of all the local banks fail, then we can rely on the income that these foreign-owned banks will raise to the economy. And another way that we can manage this macroeconomic volatilities is by hedging or through derivatives. So these derivatives are financial instruments that we can use to hedge the risk. Maybe insurance against changes in asset prices. Likewise. And another way that we can manage these macroeconomic volatilities is through capital levels. High capital ratios will improve the banking ability to withstand volatilities. So all these central bank regulatory actions to maintain the commercial banks capital level into a certain level, and all these Basel frameworks giving the guidance or framework or instructions to manage the capital of the commercial banks. All these ultimately help to manage this macroeconomic volatility. Suppose that in the case of a domestic or external shock, if that particular bank has a sound capital level or high capital ratio, then we have the assurance that this commercial bank can face the challenge compared to the lower level capital ratios holding banks successfully. Why? They have some sort of sufficient or sound balance sheet position to absorb the loss, right? So that way we can face the domestic and external macroeconomic volatilities. Then the second one is the credit booms accompanying inflow of capital inflow from abroad. So this excessive credit creation or unsound financial expansions, we say, it might cause a banking crisis again. This capital inflows, as in these are very short-term capital inflows. So it might create excessive capital creation or excessive credit creation. So how do we control this? Central bank can impose some prudential regulations like high reserve requirement, or central bank can implement sterilization policy. What is a sterilization process? If there is a higher credit or higher amount of money available in the economy, central bank can reabsorb that excessive money. For that, they use this sterilization process. So under the sterilization process, they might use several instruments like bonds, and other derivatives, financial instruments. Thereby, they will absorb the excessive liquidity in the economy. That is the sterilization process. But the sterilization policy will undermine the central bank operational independence. Why? For the sterilization, central bank has to incur a higher cost to purchase bonds, thereby absorbing the liquidity from the economy. Then obviously the central bank has to compromise its another operational goal because of the cost that has been incurred for the sterilization. Similarly, this high reserve requirement through imposing high statutory reserve requirement ratio, we say SRR ratio. So through that, the central bank can uh, make the commercial banks prevent from excessive lending. Even though they have huge inflows with them, through the higher statutory reserve requirement, commercial banks may keep the reserves within the bank under the supervision of the central bank, thereby managing the potential risk or the crisis accompanying with larger capital inflows. These are very sudden inflows, not planned ones. Sudden short-term capital inflows. Like they come into the economy, they will similarly go out from the economy during a shorter period of time. That's why these short-term capital inflows are riskier. Then the third reason is asset price bubble and the bursts. So last week we in detail discussed what is the asset price bubble and how the bubble become bubble burst, thereby resulting in a financial panic or a crisis in the system. So I'm not going to again explain what is asset price bubble. You can refer the last week session. Anyway, these asset price bubbles cause financial and banking disruption through destroying the value of securities held as the collateral when they burst. For an example, if you can remember the story of the global financial crisis in 2008, what happened there? Because of the housing market or higher prices in the houses, sudden asset price bubble in the housing market in US, it causes the global financial crisis. Because of the sudden, unexpected and unpredictable increase in the housing prices, people tend to invest in the houses. So these commercial banks they expand the credits. The credit expansion was happen, allowing the people to borrow more and invest in the housing market. But suddenly, when this then basically through the mortgages, so this housing mortgage market was the underlying reason for the global financial crisis. Then when the mortgage was finalized, what normally happened, last week also we discussed, the party who signed the mortgage agrees to pay back the amount that has been lended by the commercial bank. Suppose that I want to buy the home, that I will request a mortgage from the commercial bank. So the collateral or the security against that lended money was my house. In case I default the loan, what happened? That commercial bank can get the house from me and sell it in the market and settle the loan. So that's how the mortgage works. But what happened when the asset price bubble burst? Cost. When the price bubble burst happened, the prices of the assets are suddenly popped, suddenly going down. Then even though the commercial bank was able to get the home from me, they have to sell it in a lower price. Why? Now it's a bubble burst. No more higher prices for homes. So ultimately, commercial bank ended up with a default loss. So that's the underlying reasons for the financial crisis in 2008. Started from USA and eventually spreaded to a global financial crisis. So that's why I said this asset price bubble burst destroyed the value of the securities held as the collateral when they burst. So because of this asset price bubbles and the bubble burst, risk management become very problematic. We don't know how to assess the risk during asset price bubble. So this excessive increase in the asset price should be properly defined in order to manage the risk, in order to identify the correct risk in this asset. The excessive increase in the asset prices should be properly defined. But defining this asset price or defining the excessive level, normally the prices are increasing, you know. So how do we define, or what is the level that we are going to say after exceeding this level, it's asset price bubble. That means unusual increase. But how we define that level to determine that it is going to a asset price bubble? That is problematic. Correctly defining the asset price bubble is problematic and very difficult. So in this context, central bank action should be very careful and cautious. Why? It should not try to deflate an asset price bubble. Why? Because we don't know whether it's going to a bubble or not. If it is not a bubble, then if the central bank decided to intervene and manage the prices, then it might end up with deflating the prices. That's why it's critical to identify the bubble and define the bubble correctly. So and also it is very difficult to define the bubble, and also its tightened monetary policy could cause a recession also. Even though central bank intervene and tighten the monetary policy in order to control the price bubble, it might result as a consequence a recession in the economy. So again, asset price bubble burst can be underlying reason for a banking crisis. Then the fourth one, excessive public sector involvement and political pressure. Excessive public sector involvement and political pressure. So if you're familiar with what is going on in Sri Lankan economy these days, all these stories and the news spread regarding the central banking practices and the fiscal intervention for the central banking practices, you can have an idea what is this excessive public sector involvement and the political pressure. Normally these political parties, and their decisions are more political decisions rather than the economic decisions, right? Always these politicians, what they do, they consider about the short-term benefits. They are short-sighted. For an example, they might think only upon the winning of the upcoming election. So they will pressure the central bank to take some policy measures and give some benefits to the general public in order to win the shortly coming election. But central bank has this economic insight, so they might know if they take that decision, but it might cause in the long term to the economy. There might be adverse impact from this short-sighted political decisions to the economy in the long term. So this excessive public sector involvement can cause a banking crisis. Why? This government can strongly influence the credit allocation of the private banks, regardless of the risks and the returns. You can experience it in Sri Lanka also. They have the power to say, okay, allow that loan, pass this much of amount of money to these loans, avoid these institutions to issue loans, give loans to these parties, issue this much of money to small and medium enterprises. Likewise, they have strong influence on the credit allocations of the private banks. So for that decisions, they completely disregard the risks and the returns. Instead, they have these short-sighted political decisions, political sides. And also government forces public and private banks to finance the fiscal operations. That's another major issue that might cause a banking crisis. They might force these banks to acquire the government bonds below the market interest rate. So if they have huge fiscal deficit that they were not able to settle, then they might pressure the private banks or the central bank to acquire their bonds, thereby allowing their or thereby to finance their fiscal operations. And ultimately, it will undermine the solidity and the ability of banks to operate normally. So the independence is not there. So if we consider this, especially the South Asian countries and developing countries, central bank independence is quite lower compared to the other developed country central banks. So there are particular separate indexes to measure the central bank independence, operational wise or balance sheet wise, how much independent the particular central bank is. So normally the South Asian central banks are below the targeted index level for the independence. So we have lower independence because the political pressure, the fiscal pressure is higher upon our central banking system. Then the next reason, increased currency and maturity mismatches. So that means when the interest rate is higher, the local interest rate is higher, it adds incentive to the banks to get the to denominate the debt in foreign currency at a lower interest rate. If the interest rate in local interest rate is higher, then these banks will denominate their debt in the foreign currency at a lower interest rate. So again, it might cause a banking crisis. So the central bank should regulate the short-run borrowings in foreign denominated currency. And finally, the moral hazard creation. Under the financial crisis, we discussed what is this moral hazard problem. Simply, moral hazard problem means this, especially this systemically important bank. We say too big to fall banks. They know that they are having an important role or important share in the financial system. So they know if they fail, all the system will collapse thereby. Following their collapse, whole system will collapse suddenly. Knowing that they have this intention, since they are a systematically important bank, always government will bail out them in case of a collapse. Knowing that there is an option or there is a government or the central bank to back them, they will engage in riskier financial activities, riskier investments. So they will go for a high risk, high return operational activities. So that is the moral hazard problem. So this wrong incentive will go to the bank managers and to the shareholders of the banks through the bailing out by the government. So they know, no worries, if we fail through this investment in the risky activity, government is there or the central bank is there to protect us or bail out us. So knowing that, they will engage in risky activities. That is the moral hazard creation. It might cause a banking crisis again. So these are some of the reasons that we discussed as the main reasons behind in a banking crisis. The last session also we discussed several reasons: poor administration, poor risk management of operational activities. Likewise, in additionally, you can refer these reasons also as a reasons for the banking crisis. Now we go to the central bank past experiences. Thereby we try to, now we covered the theoretical framework. Theoretically, what should the central bank do in a crisis situation? But when it comes to the practice, by exploring few past experiences, sometimes we may feel that theoretical solutions are no more there in the practice. They might go with most of the time with unconventional tools. These are the tools not supported by the theories, but based on the situational factors, central bank will adopt these these new or unconventional tools to face the crisis. So we are starting from the Argentina crisis, which happened in 2001 to 2002. So starting from the Argentina crisis, especially what you have to note down here is this is both a banking and a currency crisis. So you know what is a banking crisis and the currency crisis. So in Argentina crisis, these two crises, both of the types were happened there. All the characteristics of these two types can be observed in the Argentina crisis. All right. Then the very first thing, the major characteristic or the major reason behind this Argentina crisis is the government abuse. So they use this word abuse itself, the government abuse. So they say because of the unstable fiscal operations and very adverse decisions took by the Argentina government, this banking crisis caused in 2001 to 2 in Argentina. So the government, mainly the government was the reason behind this crisis. Okay. So having a currency crisis, there was substantial inconsistency between the currency board regime and their expansive fiscal stance over a number of years. So especially this fiscal stance. So that is a major reason which caused this crisis. And also, as one of you pointed correctly, exchange rate uncertainty. So this exchange rate uncertainty caused problems in the banking sector. So why we are saying this? This is a government abuse. Because the government inability to adjust its budget, that pressures ultimately fell upon the banking sector. So now, normally, this banking crisis are short in duration. So we say they start and they get resolved, or banks go bankrupt. So that's the end. The crisis start, either they find the solution and end it, or the banks will go bankrupt and it will end. So we say the term we use banking run. Why we are saying it's a run? Because it's a something happened quickly. We are running out of money. It's a run, banking run. But in the situation of Argentina crisis, it says that it's a bank walk rather than a bank run. It's a bank walk. Why we are saying it's a walk? Because that it says that this is a slow motion process that happened over 16 months. More than a year, this running out of money or deposits withdrawal happened with the Argentina bank sector. So that's why it says it's a bank walk. Now you can understand, even though theoretically we say it will start with the bank panic and then run on banks and everything, but when it comes to the practice, there can be some inherent features depending on economy to economy, which is hard to explain with the theories. Similarly, here the bank work. Here, even though we believe that banking crises are quickly happening and ending, in the Argentina case, it was slow motion process which happened over 16 months. So the deposits from private sector declined greatly. If we talk about the figures, it says that from $85 billion to $15 billion, it declined rapidly, but in a slow motion process, okay, over a long period of time. So to continue this story, you should have the idea, or you should know the fact that this was a dollarized economy. So what is this dollarization? That means all the deposits and everything was in terms of dollars they maintain in their economy. So they have dollar deposits, not with their domestic currency. All the deposits and the money were dollarized, converted into dollars, and they express the value. So that's why that means dollarization. Then this when we speak about this government abuse, how much serious the abuse is, that increase the interference. The government increase its interference gradually. So they started with tampering with the autonomy of the central bank, thereby changing its central bank authorities and changing the composition and level of reserve requirements in order to acquire the resource to finance their budget deficit. So if you are taking notes, uh, better you take a note on this, how the government abuse, what are the ways that government abuse happen. They increase the interference first with tampering with the autonomy of the central bank, then change in the central bank authorities, thirdly change in composition and level of reserve requirements in order to acquire resources to finance their budget. So these are some of the ways how the government abuse was taken place. Then there was a decline in the deposits, or deposit withdrawals were there. So why there is a downward trend in deposits? Because people were afraid that the banks would be rendered insolvent by the government policy and their deposits would be confiscated. So why is that? So they observed that government highly interfere with the central banking and the banking sector, so the people were afraid that the government will announce that the banks were insolvent now, thereby their deposits will confiscated. So they were afraid. Because of that, they started to withdraw their deposits. So then the private sector assets were displaced by the public sector assets. What happened? The government started to displace these private sector assets with their public sector assets. Basically, they use the private sector assets to uh, clear their or settle their public sector loans and assets. So because of that, it caused the private deposits to decline, thereby country risk to increase. When the deposits or the private deposits are continuously rapidly declining, the country risk is rapidly increasing. So it says that the banking exposure to the public sector was very high during this period. So what is this banking exposure to public sector? It means how do we calculate that? If we get a ratio of public loans as a total net worth of bank, it was a greater amount. That means out of all the net worth, larger extent was given to the government sector as public loans. So this banking exposure to the public sector was very high. So because of all these bad fiscal decisions and fiscal activities, the people were afraid that if they keep the deposits with the banking sector, they might lose their deposits. So what they did, they started to withdraw their deposits. So then government identifying that there might be a threat on the banks upon these withdrawal restrictions, they introduce something called corralito. So what is this corralito? So that is a partial cash withdrawal restriction. That means they introduce something called the corralito means they introduce some limit. Only upon this much of percentage of upon your total deposit can be withdrawn. Other person should be keep with the commercial bank. So that's what the partial cash withdrawal restriction means. So they restrict to withdraw their own money. So the people's money, they deposit with the bank, but the government restrict the people to withdraw their own money through introducing this partial cash withdrawal restrictions. So with that, with all these adverse decisions and the adverse activities by the government, then all these incident caused to government fell in 2001 end of the 2001 the government fell. So then in 2002 the new government was established. So what the new government did, the new government declared default on the foreign and domestic public debt. So the government knows that they cannot pay all these already taken loans, so they declared default on foreign and domestic public debt. Because of that declaration on the default of public debt, it causes bank portfolios to largely render insolvent. So they are bank portfolios because the bank were the parties who lended money vastly to the government sector. So because of that, the bank portfolios were largely rendered insolvent. And again, this new government abandoned the currency board. And another thing that another group correctly mentioned, what they did was they bank assets and the liabilities were specified asymmetrically. What that means, I told you about dollarization. Before, the assets and the liabilities, everything were in dollar terms in this economy. So with all these issues, the government started to convert them or to denominate all these credits and liabilities in terms of pesos against. That means specified again. So what they did, they converted these assets and liabilities asymmetrically using an artificial rate. They used dollar deposit using 1.4 pesos and dollar credit using 1.00 pesos. So that was an artificial asymmetric rate that they used to convert the deposits and the credit. It caused a very huge gap or huge hole in the bank portfolios. So when all these adverse things happening in the economy, the confidence in the currency fell vastly. Why? Now the people observe that what the government was doing that time. They again specified all these the assets and liabilities of the banks in order to prevent them from insolvency. But they use artificial rates and asymmetric rates for this conversion. Deposits another rate, and for the credits a separate rate. So all these actions by the government created a very huge decline of the confidence in currency of the general public. Okay. Then it comes to the dilemmas for the central bank. So that's what happened so far. It started with the banking and currency crisis, mainly because of the government abuse. Then a bank walk is there. This was a slow motion process, and decline in deposits, withdrawal restrictions, the corralito, everything we discussed. It was the situation in the Argentina so far. Then the central bank interference. Now, to avoid or to control this crisis situation, central bank has to select one solution upon two solutions. So that's why we say it's a dilemma. From one over, other has to be taken. Both the solutions cannot be implemented. So they have to compromise one solution over the other. So the serious problem in the economy that time was the lack of money market or debt instruments to perform the open market operations. Lack of money, simply lack of liquidity. So why? Because of the government bonds were defaulted, no central bank instruments, currency board has been abandoned. Because of all these consequences, there was a lack of money and debt instruments to operate the open market operation. It was a serious problem in that economy. Because of that, they have to select one over the other among following solution. The first one is to finance the hyperinflation. That means simply because of the liquidity crunch in the system, they can introduce or they can print money, thereby provide the solution for the liquidity problem faced by the commercial banks or the banks, thereby avoiding them from the collapsing, but it will finance the hyperinflation as well. So that is one solution that they can afford. The other one is to do nothing and let banks collapse. Why? In order to avoid the hyperinflation, they will not inject the money into the economy. They will allow the banks to collapse. So these two were the solution that a central bank has to pick one over the other. That's why we say it's a dilemma. So it can finance the hyperinflation, or it can do nothing and let bank collapse. Now suppose that if they selected to print money to finance the continuing outflow of the deposits and thereby to support the banks from collapsing, then it can avoid the bank collapse, right? If they select the second option, if they select the first option to print money and to help the collapsing banks, they can avoid this banking crisis or collapse of bank. But this excess money that they will inject to the banking sector will ultimately go to the exchange market. How it will go to the exchange market? Now suppose there is a huge decline in deposits. Now because of the liquidity problem, now the commercial banks are in a situation where they cannot face this deposit withdrawal. So they will collapse. So the bank is collapsing mean, in other words, they fail to meet the deposit withdrawal. So in that situation, if the central bank intervene and give them the fund, so they will give the deposits back to the depositors, right? Then what will happen? These depositors have the large amount of deposits with them. Unexpectedly, they withdraw all the money. Central bank gives the money to banks to provide the deposit withdrawals. Now the depositors have all the money with them. Since the situation in the Argentina was really bad, because of this worst situation, will they invest in the Argentina bonds or Argentina financial instruments or in Argentina economy? They will not, because now the situation was worse. There was a crisis situation. Confidence was collapsed. Confidence was declined to the great extent toward the domestic currency. So all these people will go for a foreign asset investment, right? They will go for dollar investment, not for the pesos. So that threat is there if the central bank decides to inject the money. So it will go to the exchange market, it will cause a larger devaluation, and also it might cause a higher hyperinflation. So now you know what will be the consequence of the first option. If they finance the collapsing banks, they will end up with devaluation and hyperinflation. If they decide to go ahead with the second option, that means to do nothing and let the bank collapse in order to maintain the price stability, in order to avoid some hyperinflation, then what will happen is, then they allow the total banking sector to collapse. Then all foreign banks are taking the view that this was entirely Argentina problem. Then the Argentina
Mandamiz,
allow the bank to collapse in order to avoid some
Mandamiz, Voice is not clear.
Now are you okay?
Now fine. Now fine.
All right. Okay. Now clear, right?
Now it's clear. Now it's clear.
All right. Okay. The first option is to finance the hyperinflation. That means to print the money and support the banks, thereby facing the devaluation problem and the hyperinflation. Second option is to do nothing and let the total banking sector to collapse. Then what will happen? Then all these foreign banks who were operating in Argentina will get the view that this was entirely Argentina problem. Then these local branches of these foreign banks would be treated as exactly Argentina banks. So they will also let the government to decide that they also collapse because of this Argentina crisis. Then there will no liquidity can be expected from the abroad as well. All these foreign banks which were operating in Argentina also might take the benefit of this collapse of the Argentina banking sector. Thereby they will lose the abroad money, that the liquidity expected from abroad. So that risk was there. So obviously the Central Bank of Argentina has to make a trade-off between the hyperinflation without the collapse of the banks or the stability without the banks. So they have to make a trade-off. The first option is to help the banks. That means without the collapse of the banks, they are printing the money and help these struggling banks, but it might cause a hyperinflation. Secondly, they might not do anything, thereby maintaining the price stability, but without the banking sector will collapse. So this Argentina government has to make the decision, or has to do this trade-off between these two options. But the policy that they followed was, the Argentina Central Bank decided they had to slow the pace of bank run while at the same time developing the sterilization instruments to avoid the inflationary pressure. What that means? That means even though they have to go forward with a trade-off, they thought of selecting the first option. That is to help the bank with printing money. That might cause the slow the pace of bank run. That means help in the collapsing bank. At the same time, they have to use sterilization instrument to absorb the excess money back to the central bank to avoid the hyperinflation. So at that time, reabsorbing money with instrument was very challenging. Why? Because that time the confidence of the general public was severely damaged upon the domestic currency and the monetary and fiscal policy stances. Because of that, in that situation, even though the Argentina Central Bank wanted to absorb the money back by using sterilization process, I explained it before. So sterilization means using these treasury bonds or bills or some particular instrument, they absorb the liquidity back to the authority, back to the bank. They absorb the extra liquidity in the economy back to their hands. That is the sterilization process. So for this sterilization process, they want to have a proper instrument. But at that time, the trust or the confidence on the domestic currency was severely damaged, right? Then they have to introduce an instrument which is attractive enough to compete with the dollar. Why? That time, all these excess money will go to the dollar investments, not for the domestic currency peso, because of the collapse in the confidence, because of the damage of the confidence and the trust on the domestic currency. Then what the central bank did as the policy action, they continued the provisions of liquidity to banks to prevent the bank closures. So they provided the provisions of liquidity to banks to prevent the bank closures. Then they implement the sterilization. So to implement this sterilization, they have to restore the confidence in central bank again. For that, what they did, they vastly announced that the central bank is a separate authority from the bank, because what caused this Argentina crisis? The government abuse. So the government is the party who did wrong, not the central bank. So they put extra effort to give the picture to the general public that government and central banks are two separate entities, that the central bank did nothing wrong, but the government did. Sorry, thereby restoring the confidence in the central bank again. And also they have to compete with the dollar. They have to provide people a valid basis to invest in the domestic currency, not in the dollar. In order to do that, they have to offer high returns in domestic currency. Okay, they have to give high returns in domestic currency. So the policy actions, if we listed the policy actions one by one, the first one is to provide liquidity support for the banks. Provide liquidity supports for the bank. Secondly, they paid the debt abroad as well. Paid all the debt due in abroad. Then thirdly, for the sterilization, now providing the liquidity support for the banks mean they inject money into the economy. So this money will ultimately ended up with people's hand, general public hand. So this money will cause the hyperinflation and devaluation. Hyperinflation by higher demand for the assets, then the prices will go up, and the devaluation by if they invest in the foreign assets, in the dollar term investment, then all this money will go as an outflow from the economy. That will cause the peso to devalue. So to avoid that, they have to do a sterilization through introducing a financial instrument. So the instrument that they introduced was their own short-term paper called LIBAC, LDBAC. This LIBAC was the financial instrument that they introduced to sterilize the excess money back to their hand. So this LIBAC was introduced with very high interest rate to make it attractive. And initially they introduced it with very short maturities. That means they started from 7 days, then 29 days. Likewise, they gradually increased the maturity period. If they introduce a higher interest paid short-term maturity asset, then people know the risk is lower, because after 7 days, they can clear it off. So they tend to invest there because of the higher interest rate. So these are the tactics that the central bank used to attract the people towards their financial instrument. And also, even though they do all these things, devaluation happened to some extent. So to avoid that, they utilize their part of foreign exchange reserves to prevent dollars from overhooting. So this they used their they did the foreign currency intervention, which is very critical because this is an action taken by the Argentina bank opposed to the IMF recommendation. IMF recommended not to use their foreign reserves as a solution for this crisis. But Argentina observed that if then since their currency is anyway devaluating because of the crisis situation, then the dollar will go up again. That's meant by the term overhooting. Dollar will appreciate it. To prevent that, they utilize part of their foreign exchange reserves, right? So that's what they did during the crisis to uh, control this situation. These were the policy actions they took. So they were succeeded to some extent. They were controlled to. They were able to control the collapse of the banks, and also to some extent they were able to control the inflation as well. So in theoretically, the policy tools that we suggested for a crisis situation is most of the time the interest rate. Increase the interest rate in a currency run. So that is the theoretical solution provided by the literature. But in a terrible crisis of the confidence in the system, this governor, governor who was in this during Argentina crisis, he nicely interpreted this situation that during this crisis situation, foreign exchange intervention and also the high interest rates both together gives the solution. So they say the foreign exchange interventions and the higher interest rates are not substitutes but complements during their crisis situation. They used both to prevent the crisis. So they say this even though IMF was opposed to foreign currency intervention, they uh, did that to prevent their crisis, to control the crisis. Now, so slowly they were able to make progression, and by the end of June in 2002, central bank regained all its initial stock of intervention. That means they were able to realize again all the money that were used to control the crisis. So this governor in this article, he used a nice term. The greed could be made to exceed panic. Greed could be made to exceed panic. What is greed? What the Central Bank of Argentina did, they introduced this LIBAC, short-term paper, with higher interest rate. So if you give good returns to people, they will forget to panic. That is meant by the greed could be made to exceed panic. So out of the greed for the higher return, people started to invest again in domestic currency with higher return. So they forgot the financial panic which was there in the economy. So that was the story, overall story behind the Argentina crisis. So it say crisis can be stopped if correct incentives are available. So it is very critical to understand that all this, all the solutions for this Argentina crisis, among all these solutions, the major one was this LIBAC with higher interest rate. So the correct incentives created the, it made the crisis to stop, right? So that is the Argentina crisis. So when we explain these past experiences, always we can come across argument, theoretical and practical conflicts. But practically, what you have to know is when we are implementing the monetary policy practically, sometimes they will go ahead with unconventional policies as well, because sometimes theories cannot answer the problem in the economy, right? So that is all about Argentina crisis. So the second one is Korean crisis. I'm not going to explain the Korean crisis more and more because you have the handout which I uploaded in the LMS. It was a very small case study, so you can refer it at home and find the reason behind the Korean crisis. So this was actually a currency crisis which caused by the current account deficit, right? So these manufacturing companies were there, so the banking sector lended a higher amount of money for these big manufacturing companies, blinded by the belief that the corporate giants were too big to fail. But without regarding the commercial feasibility of the big companies' projects, they lended the money. But ultimately, what happened? This big the manufacturing companies collapse, thereby causing the banks also to collapse, right? So it's up to you to refer what happened in currency crisis in Korea and what are the policy actions they took to uh, control the Korean crisis. It will be better if you read it at home because all the things can be tested in the exams. So the third experience is the central bank action on global financial crisis 2008. There we actually discussed during the previous session how the global financial crisis occurred and what are the reasons and what are the solutions and the actions took by the central bank, Federal Reserve Bank, to prevent that. So I have uploaded the video also, few YouTube videos also explaining all these things. You can refer these also. So in a nutshell, if I remind again the solutions that they introduced to control the global financial crisis in 2008, one was the emergency loans to banks to prevent the fundamentally sound banks from collapsing. So they introduced this trouble asset relief program, which we call TARP, T-A-R-P, trouble asset relief program, in order to give the immediate liquidity to systematically important banks. So if you refer the LMS, I have uploaded the Lehman Brothers story, how this major global investment bank in USA collapsed. So because of this collapse of Lehman Brothers, it showed that major bank collapses are extremely costly. Thereby, the central bank or the Federal Reserve Bank intervene and give the emergency loans to all other troubled banks to prevent from insolvency. And they conducted stress tests to remove the uncertainties among general public. They test their financial soundness and they categorize the banks. These firms are stable, they have good capital level, these are having troubles. Thereby, people have the trust where to keep their deposits and where to avoid. And also government introduced stimulus packages over $800 billion to give the support for this troubling banks. And some of the laws that they introduced was Dodd-Frank law in order to increase the transparency. If you can remember, all these riskier operational activities for a high returns by the banks like mortgage and asset-backed securities, credit default swaps, securitization, everything. Because of all these things, what happened ultimately, the financial system collapsed. So to avoid all these riskier engagement of the banks and the investment banks, they introduced these laws called Dodd-Frank law to increase the transparency, that the central bank clearly observe what these bank is intended to do. And in financial crisis 2008, the important thing to note is they employed both conventional and unconventional tools. Conventional tools are the interest rate, open market operations. These are conventional tools. That means traditional tools which are consistent with the theoretical base. But these unconventional tools like quantitative easing, credit easing, interest rate on reserves, negative interest rate, these are unconventional tools that used in the global financial crisis as solutions depending on the situation. They are unconventional. So another uh, conventional tool used during this financial crisis was interest rate cuts. So the traditional monetary policy tool is a interest rate cut. So federal fund rate was declined, thereby other interest rate economy also to follow this decline. The intention of that decline in interest rate is to expand the business investment by absorbing, by taking loans at a lower interest rate, thereby to reduce the unemployment. So during this global financial crisis, it was a very higher rate for the unemployment. To avoid that, they introduced it federal fund rate cuts. But because of the inflation, basically through energy and agricultural commodities, it caused to pause these interest rate cuts. Even when the central bank cut the interest rate regularly, the inflation threat was there. So in 2008, it says this federal rate nearly became zero. So if it goes to negative, then there will be mass withdrawal of money from banks. If there's a negative interest rate, the depositors will not keep the deposit in the bank. It's like paying back to the bank for their deposits, right? Negative interest rate. So it will worsen the crisis too. It will worsen the crisis. So this nearly zero interest rate or zero interest rate means it's zero bound level, or we say it's a liquidity trap. So liquidity trap was there in the global financial crisis. So they use interest rate cuts, but after some extent, when it comes to the liquidity trap, there is no use of using this interest rate cuts. So secondly, quantitative easing, large scale asset purchases, that means. So they printed money and used that money to buy bonds, thereby injecting extra money to system. So it will cause an inflation, right? Quantitative easing might uh, create an inflationary pressure. Even though lots of money has been created, much of it is simply parked at the Federal Reserve Bank through the regulation. So that comes with that, it comes another unconventional tool, interest on reserves. So quantitative easing is also a unconventional tool used by the Federal Reserve Bank during the global financial crisis. So there they printed money and used that money to borrow bonds and large-scale asset purchases in the troubling banks. But if they inject this money to the banks, ultimately this money will go to the economy and it will boost the inflation. So similar as the sterilization, Federal Reserve Bank, they gave interest rate on reserves for the banks. That means if the banks keep reserves with the Federal Bank, they will provide the interest rate on the reserves. So thereby, these commercial banks, even though they get the extra money injections from the Federal Reserve, they kept the money with the Federal Bank again for the interest rate. So the interest rate on reserves also came as an unconventional tool which used in the global financial crisis. Lastly, the forward guidance. To increase the greater uncertainty, The central bank announces and promises to keep the interest rate low until the variables such as unemployment, inflation, or both reach a specified threshold. That means central bank announces their policy directions before. They say for this period of time we are going to keep the interest rate lower. Then people know precisely until they reach this inflation or unemployment target, they will do not change the interest rate. So the uncertainty is not there. So the people will, the confidence and the trust of the people will increase, right? So this quantitative easing, interest rate cuts, interest rate on reserve, forward guidance, all these are solutions used in the global financial crisis 2008. So why I put this slide here? Because today we are discussing central bank actions in a crisis situation. Now we know what Argentina did. It's your homework to find what Korea did. And thirdly, we discuss what USA did during the global financial crisis in 2008. So this is again your homework. What actions does central bank take to prevent a financial crisis from corona pandemic? So it's for you to get the update on the central bank practices, Sri Lanka, USA, or in whatever the country in the world, but the central banks are doing now, because this subject is a practical one. So we have to deal with what the economy is facing now. So during the corona outbreak, we know production was disrupted, unemployment was higher, and all the inflation pressure is there, or deflation can be there. So all these economic situation in the economic crisis, what is the role of the central bank? If we consider the central bank of Sri Lanka, what are the things we normally we frequently hear in the news? Always standing deposit facility rate and standing lending facility rate was further reduced. Now it's 4.5 and 5.5 for SDFR and SLFR. They are reducing their policy rates frequently, and the bank rate is reduced. And also the SRR, the statutory reserve requirement ratio, is now 2%, reduced to a great extent, right? So all these policy measures and also these additional loan grants for the SMEs, Saubhagya, everything we heard in the news and the day-to-day life, we come across these terms. Central bank is greatly interfering with the economic activities to prevent to go for a financial crisis because of the corona pandemic. Similarly, the Federal Reserve Bank also doing a greater extent some of the activities like quantitative easing and buying business debts and loans to small economies. Likewise, they also giving all these emergency rate cuts and everything during the corona pandemic to avoid it goes to a financial crisis. So it's your homework to find what are the practices that the central bank use to prevent this corona pandemic to cause a financial crisis. Okay. So today we discuss about the central bank actions during a crisis situation. So it's up to you to do the homework. That might helpful for you to get a greater knowledge on this context that might tested in the exam as well. Please find what happened in Korea and what happened during corona pandemic by the central bank actions. So that's all for today. Thank you very much.